who's winning in this economy right now?
The rich, guys like me. You know, we have gone from having 93 billion, top 400 in 1982 to having 2.4 trillion, 25 for one.
Did you know that some of the wealthiest individuals seize the opportunity to make fortunes during economic recessions? Even Warren Buffett, the legendary investor, once remarked that he loves it when the stock market takes a nosedive. Why? Because he sees it as a golden opportunity. And you're about to discover why. In today's video, we're delving into a financial strategy that Warren Buffett himself has employed during economic downturns. It's a tactic that has preserved wealth and paved the way for significant gains. So buckle up.
Well, I don't think there's a particular risk in the economy over time. We will have recessions from time to time. And we had a real doozy in the fall of 2008 and early 2009. And that has had more consequences than other recessions have had post-World War II.
You might think a recession is just a fancy term for tough times, but it's more than that. Let's break it down. A recession happens between the high and low tides of economic activity. Think of it as the economy catching a cold. Not fun, but usually not lasting too long. Post-World War II, these economic colds have averaged around 10 months. During a recession, your wallet might feel a bit lighter. Businesses tighten their belts, meaning fewer hours, or let's be real, even job cuts. It's a tough break, especially when you hear stats like the US hitting a staggering 14.7% unemployment rate in April 2020. That was during the peak of the COVID-19 recession, a real doozy. But here's a twist. While the economy might be playing hard to get, there's a silver lining. You see, some guys, let's call them the recession savvy, find ways to survive and thrive during these times. So the big question is, with whispers of a 2024 recession, how do you join the ranks of the recession savvy and possibly even get rich? We're talking about making smart moves when the going gets tough. The Federal Reserve Bank of New York is waving a caution flag, predicting a 56% chance of a U.S. recession by September 2024. Interest rates are doing their most at their highest in 2 decades. And let's not forget Bloomberg's economic forecast, a coin toss chance we're heading into a recession. But enough doom and gloom, let's pivot to the exciting part. How do you turn these predictions into opportunities? How do you ride the wave of a recession and come out on top?
Anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news.
You've seen the headlines. The market takes a nosedive and everyone's in panic mode. But here's a twist. Every stock market crash has been like a storm that clears up to reveal even brighter skies. That's right. The market has bounced back stronger after every crash. Sounds unbelievable. Well, it's a pattern that's been holding up since the days of the Great Depression. Now, let's get some wisdom from the Oracle of Omaha himself, Warren Buffett. He's the guy who sees a silver lining in every economic cloud. Buffett says that when others are scared, you find the golden opportunities. For instance, the worst crash in history, 1929, which kicked off the Great Depression, was followed by an epic recovery. Fast forward to today, and the market's all over the place again. Big names like JP Morgan and Goldman Sachs are throwing around numbers like a 20% drop. And since 1946, the average bear market saw about a 30% plunge, with 2009 taking the cake when the S&P 500 nosedived by 54%. But hold on, it's not all doom and gloom. When the market's down, it's like a clearance sale on Wall Street. Stocks going down by 50%, that's like getting them in half price. Buffett loves these sales and he's not shy about it. He famously said, "Bad news is an investor's best friend." Why? Because it lets you grab a piece of America's future without breaking the bank.
I can't predict recessions. If you guaranteed me there would be a recession next year, I would be buying and selling the same securities I'm buying and selling today.
In his 2016 letter to shareholders, Buffett painted a picture of economic skies turning dark and raining gold. And he had 2 key takeaways for us. First, when everyone else is scared, that's your cue to start shopping for bargains. And second, don't let your fear hold you back. History's on your side here. And after a typical recession, the S&P 500 usually drops around 30%. But then it bounces back with an average return of 42% in the following year and about 60% within 2 years. So what's the game plan? Simple. When the market takes a hit, that's your chance to invest and potentially kill when things turn around. And in all this, remember one thing: cash is king. When the economic seas get choppy, people often flock to the safe harbor of cold, hard cash. It's like having an emergency kit during a storm. You feel safer just knowing it's there. So, what's the big deal about having cash during a recession? Picture the economy dives and everything's on sale. If you've got cash, you're like a kid in a candy store. You've got options, flexibility, and the power to snatch up bargains left and right. But let's not forget cash has its critics. They'll tell you it's like holding on to ice cubes, slowly melting away with inflation. Yet when stocks and bonds are doing their roller coaster thing, cash suddenly looks pretty cozy. It's like having a reliable friend in the world of flashy acquaintances. Now let's add a bit of sparkle to our discussion. Gold. Oh yes, gold isn't just for bling in history books. It's the superhero of assets during tough times. Back in the grim days of 73 and 74, when stocks were in a tailspin, gold was breaking records, shooting up by more than 70% each year. Think of gold as your economic life jacket. When the stock market hits an iceberg, gold keeps you afloat. Take 2007 for instance. The market's in free fall, and what's gold doing? It's on a rocket ship to the moon, doubling its value in 4 years. And let's not forget the recent COVID-19 pandemic. Gold shone brighter than ever while the world was uncertain, setting new records. Sure, gold isn't always the show's star, but it often steals the spotlight when the economic stage gets chaotic. However, Warren Buffett says this.
And instead you use the $10,000 to buy gold. Now for your $10,000, you would have been able to buy about 300 ounces of gold. And while the businesses were reinvesting in more plants and new inventions came along, you would go down every year look in your safe deposit box, and you'd have your 300 ounces of gold, and you could look at it, and you could fondle it, and you could, whatever you wanted to do with it. But it didn't produce anything. It was never going to produce anything.
Warren Buffett is not just a billionaire, he's a financial sage who's cracked the code on making money work for you. So what's his secret? It's all about investing in productive assets. We're talking about real estate, businesses pumping out goods or services, and even farmland. These aren't your typical stocks. They're like golden geese, laying eggs of cash flow that you can reinvest or turn into sweet dividends. Buffett broke it down at the 2021 Berkshire Hathaway AGM. He's all about those assets that keep churning out wealth, and he's not shy about saying it. His mantra: let time do its magic, stay calm, diversify like a pro, and keep those pesky transactions and fees to a minimum. And here's the kicker: recessions are like stealthy predators. They often creep up on us, and they're already in full swing by the time they're officially declared. Remember the Great Recession of 2007-2008? It wasn't officially called a recession until December 2008, just as it was winding down. The 2001 recession played out the same way. It started in February, but no one labeled it until October 2001. This delay is a stark reminder that waiting for an official signal to act can mean missing out on prime opportunities. So, how do you strategize? Let's break down the game plan for boosting your financial stability, even when the economy looks gloomy. First off, let's talk about your saving strategy. It's time for a little financial spring cleaning. Take a good hard look at your expenses and figure out where you can tighten the belt. It's all about cranking up your savings game. Why? Because having a solid emergency fund, think 6 months of living expenses, is like having a financial lifeboat. It saves you from unexpected expenses, whether a sudden job loss or those pesky increases in daily costs like food and gas. Next up, let's dive into diversifying your investments. Seeing a stock price dip might tempt you to go all in, but hold your horses. That's like putting all your eggs in one basket. And nobody wants scrambled eggs if the market takes a turn. Index funds are your go-to for those just dipping their toes into the stock market. They're like a sampler of the market, a mix of different stocks, reducing your risk. And remember, think long-term. Channel your inner Warren Buffett and keep investing steadily through thick and thin.
But you shouldn't buy stocks unless you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention to them. And you're not going to pick the bottom and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more.
Historically, markets have rebounded, so patience is critical. Finally, let's not overlook the power of cash. While the stats might nudge you to invest quickly, there's wisdom in holding some cash back. It's like having a secret stash for emergencies and ripe opportunities. Money gives you flexibility and security, two must-haves in the unpredictable world of recessions. Now, we want to hear from you. What investment moves are you considering in preparation for the next economic downturn? Share your thoughts in the comments below, and let's keep this conversation going.